Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we got a video for trading on Thursday. That is Feb 5th, 2009. I will say right off the bat, indicators, if you are a technical analyst, you see that some indicators are pointing north right now and some are pointing in no direction at all. And I have found throughout the time of my trading and doing analysis that when indicators are not agreeing, then the formation takes precedence over which direction you should trade in that day. It's always better when the indicators and the formation are in sync. When they fall out of sync, I go with the formations. Now, we're day traders, so we look for like a daily formation or a formation that has been created over the past few days, and we trade within the context of that formation. One of the ones that we have for tomorrow is called a swing day, and I will show that to you in a moment. But traders, remember this. Indicators, some might be pointing up, but tomorrow we have jobless claims, factory orders, productivity reports. Both the Bank of England, the ECB as well have to make interest rate decisions. We have chain store sales. You know, I can't imagine any of those numbers becoming bullish for this market. So I would imagine that those numbers alone are going to push us down. Then we got Friday's numbers. So I will say no matter what happens here, don't fall in love with the upside because this market is simply not ready to go bullish yet. I think there's another leg down coming. We'll see. We are day traders. We take it one day at a time. For tomorrow, we have a red Omni in the ES and in the NASDAQ. We are choosing formations over indicators, and let me show you what that means. I will illustrate on the board right now. I have a little drawing here for you traders. This illustrates yesterday's trading, so let's put this in the proper context of the days. This will be tomorrow that I'm going to draw in, or Thursday. This is Wednesday. This is Tuesday. Tuesday's bar. Wednesday's bar opens up, rallies very high, turns around, drops all the way down, and settles by the low of the day. We call that a swing day. That's a swing day. How do you handle a swing day? A good analyst handles a swing day only one way. You never know if this will work, but you have to handle them the same way each time you see them in order to keep the odds in your favor. And this is what you do. Tomorrow when the market opens, if it starts to rally and get somewhere near the day before yesterday's high, if you see it get near Tuesday's high, you sell it right there. You put your stop in above the swing day's high and see if it does its job and produce a down move for you to profit on. That is how you test a swing day. Again, no one knows for sure if it's ever really going to work. The best we can do is keep the odds in our favor by handling it the same way each time. So if it rallies up towards Tuesday's high, go short, put your stop in above yesterday's high, and hope you get the crack down. Now, if that was my only reason for trading tomorrow, if indicators weren't all pointing down, I might back off. I have more than that to show you. Now I'd like to show you some charts very quickly. I have 3 charts I think you'll find interesting, which make more of a case for the downside than the upside. Let's go look at some charts, traders. Okay, traders, the first chart I would like to show you is the S&P March daily bar chart. In this bar chart, we do have a swing day. That would be this day right here. The market opened up, rallied, hit a very valid trend line, dropped down, and settled by its lows. This is our swing day. So if we get to this high right here, that's where we would go short. Now, again, I was saying if that was my only reason for going short, I'd have to make sure all of the indicators were pointing lower. But that's not it, traders. As you can see, clearly there is a head and shoulders continuation pattern right here. You can see that we are inside of a large apex or a large angle wedge formation. On top of that, that formation also gets a little tighter right here. And that's the line that we have been bouncing off of and dropping. So you have this head and shoulders, you have this really big wedge formation, you have the smaller one inside of it. Each of those are bearish formations. Then traders, I've had a lot of my Omniacs email me in certain charts, and they have been calling this right here a large head and shoulders, and I must say I cannot deny that that is what we're looking at. It may even encompass what's over here as well into it, I'm not sure. But you do have a head and shoulders, and in such a bear market as the one we're in, it can only be considered a continuation pattern. Every one of these head and shoulders, whether they be upright or inverted, that I have shown you in the last year have led to lower prices. Why should this be any different? On top of that whole thing, you have this Omni average that we just cannot get above. It fails every time it gets near it up here. So that, along with the swing day, is telling me that I have to take formation over indicators, and I am looking for more downside tomorrow. Now that's S&P traders. Let's look at another chart here. Okay, traders, the next chart I'm showing you now is the Dow Jones Industrial Average daily bar chart, and it too does have that very same head and shoulders pattern. Yes, it's inverted, but that still should bring us lower numbers. It's already beginning to break down right here, and the likelihood is that we can break down below 7,000 based on this formation. Again, another market that clearly cannot get above this Omni average. Look at how many times it has tried and failed. It just continues to drop off every time it gets near it. So again, formation takes precedent over indicators. Some indicators are pointing this way, many are pointing sideways. That means we leave these alone and we look at the formation. Formations certainly are bearish right here. Let's look at one more chart, traders. Okay, traders, the last chart I'm going to show you here tonight is the NASDAQ daily bar chart. Traders, NASDAQ has a swing day. The market has already opened, rallied to the high of the day before, and broke all the way down to here. That swing day is already working as we expect the one in the S&P to work. That's very interesting. On top of that, you bounced off this Omni average and failed miserably all the way down to here so far, and you are inside of a wedge formation getting ready to break out of the apex. And that looks bearish as well. Traders, what can I say? Formations are absolutely pointing lower, and you can also make a case for that very same head and shoulders right here. So what is an analyst to do? Have no choice but to sell into this until something starts to pull these markets up. I can't see that coming anytime soon. I think we are in the lower rounds of a 15-round prize boxing match. You know, like 15 rounds from the days of old. I think we are in the lower band of those 15 rounds right now. We have a long fight ahead of us, traders. Be prepared for more downside here. So, traders, you seen those charts? You seen the swing day I showed you? You see the NASDAQ and the S&P clearly have those swing days. Again, indicators, they're not all pointing in the direction I'd like them to be pointing in, and you can see why I am choosing formation over indicators, and almost always that is the case. So I'm going with what should be proper analysis and action of such. All right, traders, so now that we know that, and we have a red Omni, do your homework and see if you can find the levels that I'm looking at to get in. I have a trade set up right now at my site. It's www.livewithoscar.com. Come on down to the site. Take a look at the Omni page. You'll see my trade recommendation, where I'd like to get in. If you're a member, I'll tell you where I'm getting in, where you should place your stops for protection, and always place them first, and our profit objective. And then during the day, I will send you live flash updates when the markets move and we need to move our orders and or get out of markets. So come on down to the site. Jump into the chat rooms. Never trade alone, traders. There are thousands of us Omniacs. Hundreds show up in the chat rooms every day, and we huddle together and get through this rough and tumble market. And I will tell you this, many traders have come to me and said, Oscar, I am done losing money with fund managers. I want to handle my own finances. I want to be in control of my own financial destiny. And I have been helping them do exactly that. Gain control of their destiny, gain the proper mentality, give them the mentoring that they need to stay calm and collect, and give them lessons on the technical analysis to help them point their trades in the proper direction. I would be glad to help you do the same thing. I am a broker. You can open up your account with me if you'd like. Just come on down to the site. We'll gladly tell you how you can do that. And if you team up with me, you're one of our VIPs at the site, and I will treat you as such. All right, traders, don't forget, do your homework. Always place stops first. Give me a call day or night anytime, 702-629-4755. And always remember, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many years. Good luck trading.